Hi there and welcome everyone to Cryptocurrency Australia. And in today's video, we're going to be discussing some pretty big changes coming to Singapore in relation to ending GST taxation on cryptocurrencies. So in today's video, we're going to be diving into what this actually means and what the specific legislation entails and how this compares to the GST implications we have here in Australia. So with that being said, let us begin. Welcome back to the video, everyone. Thank you for tuning in. You are here with Bowstoner from Cryptocurrency Australia, the channel where Bitcoin, economics, and politics come together. Now, here we have this article here from CoinDesk. Singapore proposes to end GST taxation on cryptocurrencies. Diving straight in. The Singaporean government's taxation agency is proposing to exempt its goods and services tax on cryptocurrency transactions that function or are aimed to function as a medium of exchange. The Inland Revenue Authority of Singapore, IRAS, published last Friday an e-tax draft guide for treatment on what it calls the digital payment tokens, seeking to exempt the GST liabilities for any entity dealing with such digital assets. If the draft guide can pass the legislation, then starting from January 1st, 2020, the following changes will take effect to better reflect the characteristics of digital payment tokens. The use of digital payment tokens as payment for goods or services will not give rise to a supply of those tokens. And just to provide a little bit more context over here on the actual e-tax guide, we can see here that under the current rules, the supply of digital payment tokens is treatable as a taxable supply of services. Therefore, the sale, issue, or transfer of such tokens for consideration by a GST-registered business is subject to GST. When the tokens are used as payment for the purchase of goods or services, a barter trade resulting in two separate supplies arises: a taxable supply of the tokens and a supply of the goods or services. Coming back to the article, point number 2, the exchange of digital payment tokens for fiat currency or other digital payment tokens will be exempt from GST. So my interpretation is this is in relation to the liquidation of tokens for fiat, either on an exchange or perhaps even at the point of sale. Reading on. The IRAS stated that e-tax is still in its draft form and the Ministry of Finance will be holding a public consultation from now until July 26 on the legislative amendments for digital payment tokens. The draft guide has also set out a detailed parameter on how digital payment tokens are defined, which should have all of the listed characteristics below. A. It is expressed as a unit. B. It is fungible. C. It is not denominated in any currency and it is not pegged by its issuer to any currency. D. It can be transferred, stored, or traded electronically. And E. It is or is intended to be a medium of exchange accepted by the public or a section of the public without any substantial restrictions on its use as consideration, but does not include. And here we have, reading on, examples of digital payment tokens are Bitcoin, Ethereum, Litecoin, Dash, Monero, Ripple, and Zcash, the IRAS added in the proposal. Notably, the agency specified that stable coins, a type of cryptocurrency designed to have a value pegged to a fiat currency, may not qualify to be GST exempted. Now, I find that part particularly interesting and I like it because, stablecoins, I think, have a purpose in terms of more efficient liquidity on exchanges, but I see really no point in using them in normal day-to-day transactions. And that is because, to me, they are no different than using normal fiat currency. Most fiat currencies are entirely digital anyway. Here in Australia, most of us use EFTPOS cards, we just use debit cards, and most of our transactions day to day are completely digital. So I see no value add for using a stablecoin. I see stablecoins, like I said, as really only good if you were doing trading on a very fast liquid exchange such as Binance, and you wanted to convert into something stable rather than wear the volatility of converting into Bitcoin or Ethereum. So I'm actually glad they're doing this because they're not rewarding something that's adding no extra value. They're actually kind of giving incentives to use more hard currencies, Bitcoin being the hardest. But most of those coins there, I would arguably Ripple does not have the same hardness properties as the others. But these generally contain hardness characteristics, especially Bitcoin, Ethereum, and Litecoin, because they use proof of work mining. Anyway, reading on. Any digital token that is denominated in any fiat currency or with a value pegged to any fiat currency will not qualify as a digital payment token, the IRS said in the draft. For example, a digital token pegged to US dollars will not qualify as a digital payment token. IRS said such effort to end GST liabilities on cryptocurrencies follow the worldwide development and growth in the space that led to various jurisdictions to have reviewed their stance. Similarly, IRS has reviewed its GST position to keep up with these developments, the agency said. Under the current framework, the supply of digital tokens is still seen as a taxable supply of services. Therefore, the sale, issue, and transfer of tokens for consideration by a GST-registered business is subject to GST. When the tokens are used as payment for the purchase of goods or services, a barter trade resulting in two separate supplies arises, a taxable supply of the tokens and a supply of the goods or services, the IRS said in the draft. However, this is referring to what they currently have, because it says here, under the current rules, the supply of digital payment tokens is treatable as a taxable supply of services. So I'm not actually sure. Oh yeah, here we go. It says under the current framework. Okay, next paragraph. In October 2017, lawmakers in Australia passed a piece of legislation to end what was called the double taxation, exempting the liability for paying goods and services tax on cryptocurrency purchases. So overall, I think this is a fantastic proposal. I see no reason it won't get approved, because it is I think a good thing for everyone. Essentially what it is, if I'm interpreting this correctly, is it is incentivizing businesses to accept Bitcoin and other digital tokens under their definition, digital payment tokens, for business. Now, if they are providing a good or a service, and they are accepting a digital payment token under that definition, then the GST is exempt, which means that additional cost does not have to be passed on to the customer, and then the tax does not have to be paid to the government. That is how I am interpreting it. So if you make a purchase for something in Singapore, in Bitcoin, directly using Bitcoin, you don't have to pay GST, which means the cost of that good or service should come down. I'm not sure what the GST rate is in Singapore. It may be similar to Australia, which is 10%. But if this is the case, this is amazing, because it's actually really going to foster and help a lot of innovation in the industry, because you're incentivizing people to use something because it's cheaper. Now, unfortunately, over here, when we get into the Australian GST and digital currency, we'll just read through this first and I'll give you a bit of commentary. Sales and purchases of digital currency are not subject to GST from 1st of July 2017. This means that you do not charge GST on your sales of digital currency, and similarly, you are not entitled to GST credits for purchases of digital currency. Now, it's important to note that I think that first paragraph is mainly referring to exchanges, right? Because if you are selling digital currency, generally you're doing it on an exchange, and if you're buying digital currency, you're generally doing that on an exchange. You're not using it. That process is not occurring in a normal day-to-day transaction. That is happening on an exchange. You're acquiring it, or you're probably selling it for a profit. Next paragraph. You do not have any GST consequences in relation to buying or selling digital currency or using it as payment if you are not carrying on a business. So what this would refer to, I believe, again, if my interpretation is correct, it may be incorrect. There's a lot of legalese when you get into this kind of taxation language. So please bear with me if I do have something slightly correctly. Please keep that in mind. When it's saying you do not have any GST consequences in relation to buying or selling digital currency or using it as payment if you are not carrying on a business, what they would be referring to there is if I want to conduct, say, like a barter trade or something with someone else for maybe a one-off good, it's not a business transaction, then that particular transaction, there would be no GST. So let's say, for example, a friend of mine came over and did some work for me. I wanted to give him some compensation for that in Bitcoin, then there would be no GST obligations as part of that transaction. Next paragraph. If you are carrying on a business in relation to digital currency or as part of your existing business, or if you're accepting digital currency as a payment in your business, you need to consider any GST consequences that may arise. Now, here's where my own experience comes into play, and where I actually think it's a little bit disappointing for Australia is that if you are invoicing for a business in Australia and you want to accept cryptocurrency, the same GST applies as if you were just accepting fiat currency. You merely have to peg the amount of crypto you're receiving to Australian dollars. You charge GST just like you normally would. The same goes if you're conducting a business and you're accepting cryptocurrency. You still have to, under this guideline, again, if I'm interpreting this correctly, but I'm fairly confident I got this right, you still have to charge GST on those transactions. So let's say you're a small coffee shop, you want to accept Bitcoin, you still have to be charging GST on every single sale of every single thing, as opposed to what it looks like is happening in Singapore. In that situation, GST will not have to be payable for ordinary day-to-day transactions. Again, assuming that I have the interpretation correct. Even if that's not the case, it's still a positive that Singapore is bringing more clarification in terms of obligations for businesses and everyday consumers in relation to taxations, and hopefully looking at concessions in the GST department, with hopefully normal business being exempt from passing GST costs off onto their customers by accepting Bitcoin and crypto. So we're just going to have to wait and see. But overall, it's awesome. It shows that some of the better economies, Singapore is like a booming city, a technologically advanced economy. I love Singapore. I've been there many, many times. So it's just awesome to see that we're seeing progress all around. But guys, I'll keep in tune with this story, and if there are changes and more clarification that comes, I'll be sure to provide it. So that's it for the video. Catch you in the next one. If you enjoyed the video today, then please consider leaving a like, and if you haven't subscribed yet, then come on board and also click the notification icon so you're always kept up to date. Leave a comment and tell me your thoughts on today's content, then check out this next interesting video picked just for you.